Martin from Secrets, the channel for learning about trading and investing. Welcome to markets next week. The weekly stock market analysis show where we understand what happened in the market during the previous week using the technical charts and then try to learn something from it and plan for a better trade for the upcoming week that's starting from tomorrow, February 19, Monday 2024. So if you're not subscribed, please subscribe and share to your friends and colleagues so that it reaches out to max. Thank you. We will deep dive into the charts. We have the wrap up. We'll come back here. But here's the weekly view. As we have been seeing for several weeks now, it's a cup and handle, multiple flag breakouts, and right now we can see the left side index Nifty is about to make another flag breakout. Similarly, Banknifty right side, cup and handle breakout, multiple flag breakouts, and once again another flag maybe in the making in the Banknifty as well. Look at this, it's well within a trendline channel and rising up on Nifty. Similarly, same thing is happening within a trendline channel, but here the Banknifty is still below the median of the trendline channel, but while Nifty is on the top of the channel, closer to the top of the channel, you can say. That's a weekly view again. This is the daily view. It has been trending up and up at a period of consolidation between July and December probably, and then big breakout happened, and then once again consolidation is happening on the left side Nifty. Right side Bank Nifty, it's been very choppy, but it's consolidation, retracement, breakouts, consolidation, retracement, all this is mixed bag picture is what very volatile Bank Nifty during the last 1 year or so since the rally has begun. But right now you can see that it is trying to move up the top of the channel once again. That's one. If you look at the candlestick on the Nifty, you can see it's a kind of a hammer considering the wick size. Body is a little extra, but it's a hammer and it's a decent bounce up. Similarly, a more volatile hammer that is engulfed the previous red hammer is what you see on the right side on the Bank Nifty. So overall bullish green close with Nifty once again back to the same zone where it had met with resistance about 22k all-time high levels. Bank Nifty a very decent bounce and is also at a crucial resistance zone if you consider this high. So this is the zone of the previous high, very crucial. So it could do a change in polarity, bounce down, change in polarity, move down could happen from here if this acts as resistance on the Bank Nifty. Similarly, this can be a M pattern or a double top or triple top, a reverse that can happen from here. So very crucial resistance, anything could happen. And if this breaks out from the zone, it can be big moves as well. And if you can see, it's a gap, multiple gaps from the last 2 days on Nifty and the Bank Nifty. And this is a bullish kicker pattern, but it's also a spinning top. It's spinning top will be confirmed with a small body, and which is indices of course, and with the top of the rally. It can turn out to be tri-star three candlestick pattern, and then or it could get into big trouble if there is a spinning top on the very top of the rally. This is not exactly on the very top on the left side. You can see here also it's more or less a spinning top, not exactly a loaded hammer, but either of the case is a small body. That means there is some pause or indecisiveness naturally. So both of these could be indicative of the reversal from where it is if it is confirmed that price moves below the candle's low. But a very crucial zone. And the last candle on the daily that you're seeing is a professional gap. It's a pro gap bullish kicker pattern, which is slightly indecisive on Nifty and the Bank Nifty both. That's the candlestick pattern. So you can see that the last 5 days move, you see it did make a move down and then it reversed immediately, and then it was the rest of the 4 days was up move. Finally, getting into a crucial resistance zone. That's what is happening on the Nifty and the Bank Nifty. Bullish bands are showing that there is a small beginning of expansion on the upside, which is positive bullish, indicating price could move above that further. Banknifty also, it seems to be expanding on the upside from the contraction that it was doing earlier, which is positive and indicates probably potential up moves can come in if it confirms. But one more can maybe probably needed for it to start beginning to walk on the bands, and it can be big breakout. This is on the daily charts, mind that. So before we get into support resistance levels, let's just summarize it. So it's a crucial resistance zone, but it is bounced up to that resistance zone last week, right? And just closed green with a 1.18%. It's 257 points up on the Nifty, and similar bounce up to the crucial resistance zone as happened in the Banknifty also with a bear trap, hammer trap. Both of them are bear trap because moved below the price low and then try to trap the bears, which is for hoping to fall down and then reversed. That's a bear trap on both. It's positive 1.61, 735 points up move that you're seeing on Banknifty. So Banknifty has done a decent, much more better bounce this time after a long time. It has cleared the 20 exponential weekly average, weekly moving average of exponential. Banknifty also cleared that as well, and the 20 exponential moving average is possible. So that's very positive on the Banknifty. Banknifty finally has made some move, and Nifty had gained 130 points. That's less like 0.5% more, and has formed a pro gap kicker and a spinning top. You've seen that, and it's closed about 20 exponential moving average in the daily charts. Banknifty has closed the gap top and it's closed positive 0.36, 166 points up on a spinning top, and it's also closed above the 20 exponential moving average. So basically it has done a decent bounce up, right? Beginning with a downward, then reversing immediately, and then continue with that trend till Friday. And this managed to climb up the bullish short-term momentum in the bull, climb up into the bullish zones also in the short-term momentum really charts. And trend also has closed over. The Banknifty trend has closed over. The momentum is still sideways and rising up and trying to climb above the bullish. So this not happened yet on the Banknifty. Remember, Banknifty had done a deeper cut of 8.8%, while Nifty had done only 4.4% of correction so far from the recent swing lows. So there is a double pattern, volatility divergence, where one leg of the price is outside of the Bollinger Bands and one leg is inside. So the setup which is bullish in nature, and it can form a double pattern breakout if it is confirmed. It is almost confirmed in both of the indices, and if it Monday would be deciding day, or next week probably, if you consider the pattern to be on the weekly charts, next would be crucial, and it can really break out, make big moves. But similarly, there is an M pattern that's on the Nifty, which is also crucial, and it can reverse from there all-time high. So if there is a change of polarity bounce on the opposite side, down move is also possible on the Banknifty. Both are unconfirmed, but there is potential for both of this. So it's very crucial. So we just don't know what happened, right? Next week is very crucial. So all eyes will be on if Banknifty is going to join the party, which is lagging behind slightly. Is it going to join together the party and then take Nifty to the next level of 2,500 or 3,000, whatever it is, right? So that's a crucial question. The Bollinger Bands we already analyzed and showing some indication of a further up move. So let's see the support resistance level. So clearing the all-time high of 22,126 and closing the green candle above 22,000 is very crucial for the next week. Right. And after that, it can be 22,500 could be the major resistance in the upside, although it's an unknown territory after the all-time high. 22,500 is a big rounding number, and that can be considered as the target for this consolidation width height-wise. If you calculate above, it will come to more than 22,500 above. So that could be the major resistance ultimately. Always the rounding numbers in between would have resistances. Downside support will come in the 20 exponential moving average of 21. So 22,000 is cleared already. So 22,000 would be support, some kind of support if it managed to move a little above that. And then 22,750, which is exponential moving average 20, which is can support now. Then comes 21,400, which is a 50 exponential moving average, and Fibonacci retracement level of 23.6 also comes in that zone. Then if that also is breached, it goes back to 21,150, which is its previous swing lows, and then breach of that will take it to 21,100 and 29,50 zones, which is the gap support on the downside. Banknifty similarly in the upside. The first resistance to take out would be 40. Would be 46,500 because it's a rounding number, but the major thing would be to clear the 47,000, which is a rounding number again, and it is also 47,200, which is very close by the previous swing high, which could be the breakout zone. So about 47,200 would be really push. It would also be outside of this parallel channel, this which is part of a flag, and it would also mean a breakout from this consolidation rectangular box. So 47,000 clearing and 47,200 clearing will be the major hurdle. Of course, it is 48,000 where there is a big rounding number resistance and a gaps resistance also there. Beyond that, it's all-time high at 48,636. Downside, the 45,900, 46,000 would be a very crucial support zone because it's a 20-50 exponential moving average zones. After that, 45,650, which is a 100 exponential moving average. That is close, you go back to 45,000 and then 44,700, which is a 200 exponential moving average. Breach of that, it could take you to 44,000 and 43,950, which is a gap support. So that's Banknifty's resistance support zones. Moving on, if you try to analyze the momentum and the trend using the RSI and the ADX indicators on multiple time frames on weekly and daily. Left side you have weekly Nifty and the Banknifty. What you're seeing, it's momentum rising up, bullish zones in Nifty. Banknifty is set to catch up on the weekly medium term, but rising in the sideways upside, trying to climb into the bull zones. It's not happened yet. Similar to the daily charts, the Nifty is bullish, absolutely climbed above that RSI 60, and Banknifty is still struggling to move above that, sideways rising. So Banknifty is basically sideways in both time frames, while Nifty is absolutely bullish on all time frames. If you look at the ADX indicator, it is closer with the bullish zones on the short term on both indices, right? But medium term, it's yeah. So actually, the momentum has just crossed over into the positive zones on both time frames on both indices. Actually, trend has just crossed over. Banknifty is on the edge, it's just crossed over. The strength varies. There is weakness in that strength of crossing out to the bull zone. So with the MI positive, slightly falling in the case of Banknifty. So trend is great, but momentum is yet to catch up in the Banknifty especially. Nifty is just managed to climb in the bull zone for the short term as well, where it had lost. Yeah, so Banknifty there was thereby as medium term has some lack of momentum. And there's a weak bullishness in the case of trend. That's what I can summarize on the multi-time frame analysis with indices comparative. Moving on, if you try to understand the volatility in another way using the ETF waves, you can see that it is kind of flattish close, 1.5% only down, actually 15.22. It's above the 15, so it's still above the low volatility regime, you can say. Once if it is heading towards the 20, you have to stay out. For control position size, we have to be extremely cautious. As of now, the implied volatility to realized volatility spread difference is -6. This is not 50% of what it is, so it's not in favor, much in favor of option selling. Otherwise, open interest is, so basically it indicates probably it's time for moving to directional strategies or spreads. Right? Futures open interest analysis showing it's a long build-up on Banknifty and both Nifty also, both of them. Right? So open interest for the February 22nd Banknifty expiry weekly and February 21st Banknifty expiry and February 22 Nifty expiry. Both of that is showing that put correlation is bullish, 1.11 on Nifty and 1.13 on Banknifty, which is great. So futures OI and options OI showing its bullishness. That's what I'm saying. So look at where the highest put and call writing is there, 21,000 and 23,000. That's a very wide range of 2,000 points. So volatility is expected by the option writers. Right. Second highest support is seen as 22,000 and second highest resistance seen at 22,600. Banknifty similarly 46,000 and 44,000. Relatively narrow range for a weekly expiry. That's where the highest put and call writing is seen. 44,000 is where the second highest put writing is seen, and then 49,000. That's crazy far away. So the second highest resistance is seen. So some amount of volatility is expected by the market, but it's definitely bullish, which with the supports dominating. You can see the red supports around. I think some unwinding is happening on both sides. On the put side, calls have been unwinded and the put side dominates. Right, put call ratio is definitely bullish and long bit of which is high. So you already see that it's bullish as per the opportunity analysis for the Nifty. Looking at the sectoral indices that constitute the market, the IT almost all of the sectors are doing absolutely great. Previous week was up on all of them, except 0.5% down on the FMCG, 1.5% down on the metal. Otherwise, it was all up. Previous week, 2% up on the IT sector, and auto had done the big move, 4.4% up, and nearly 2% pharma up, and flattish up 1% on reality. So auto has done big time. Pharma is also doing good. But otherwise, if you look, FMCG is having trouble. It's having a momentum that is bearish still on the short term and sideways and falling down in the medium term as well. But momentum is bullish and portions could be taken on many of these sectors. Right, we can take portion on the IT sector. You need to wait a little more for the short-term momentum to catch on the metal. But auto sector we can definitely bullish and take portions. Pharma you can take long portions. And FMCG of course you can't take portions. So reality you can take portions. So except the metal in the FMCG, which was slightly down this week, all other sectors absolutely bullish and can take long portions. Also considering the momentum in the medium term and long term. Right. That's a summary that you see here. It's Nifty charts that you're seeing here. So the brink of a breakout, it could be mega breakout, there could be cup and handle where there's some reversal can come in, and then eventually it's going to go up and up. Absolute bullish momentum and trend. Down metal you can see it's midway, a lot of space towards the top of the channel. Moment is bullish, trend is bullish moment. So all the major 6 sectors that we are analyzing, major indices, sector indices are all bullish on the medium term. Absolutely. Auto, look at this, breaking out all-time highs at the top of the channel, slightly cautious. Pharma, all-time highs, breaking out above 80, extreme bullishness, trend bullish, absolutely, all-time highs. Flag breakout is what you're seeing there. And also a rounding pattern breakout, cup pattern breakout also is there. FMCG is the only sector that has retraced since last 5 or 6 weeks and slipped in sideways in the medium term. So except the FMCG, all the other sectors are in medium term bullishness. You can see. Look at this, reality also at the top, all-time highs. Slightly cautious because of the top of the trend line channel, there can be resistance. So we have to be slightly cautious with this, extreme bullish, and you can be much more bullish on the other two, IT and metal and FMCG has done some consolidation retracement. Now it could further move. That may be driving, because others have run up a lot. I'll be cautious there, right? So that's what. Moving on, if you analyze the industry heavyweight stocks that contribute maximum to the indices, you can see HDFC Bank was in big trouble and continued to be big trouble considering the big volume sell-off that has been happening since for 6 weeks or something, and now this is the first week we have seen some green that is seen finally. It has taken a support at the trend line, but the momentum is still bearish. The trend is also bearish. But be cautious. But we never know whether this is the end of this, because fundamentalists analysts are saying that it may take 1 or 2 quarters more for the profit to come in after the merger, right? So until then it may be consolidating probably and not be falling down below the 1300, which may be long investment opportunities probably. Plans on the breakout, some consolidation happening this week, but momentum is absolutely bullish, trend is bullish, no doubt. ICICI Bank at the top, bullish, momentum climb back to the bull zones in the medium term. Yeah. So we have Reliance and ICICI Bank absolutely supporting. The trouble is HDFC Bank and then ITC. Look at this corner, that's also slipped in the bear zones. That's a flag pattern bottom. So if it is taking a support and consolidate here, it can be a big breakout from here. But momentum has to climb back into the bull zones back, at least in the sideways zone back. But it's now slipped in the bear zones. So HDFC and ITC is what is causing problem. But look at this IT stocks, INFI and thesis, both of them are breaking out of the parallel channel and absolutely bullish. But US markets are jittery at the top, so you're cautious. But yeah, those are the things, those are the stocks that are holding the market. Forces, TCS, ICICI Bank, and Reliance is holding the market. HDFC is giving trouble to the market. ITC, both are giving trouble to the market. Kodak Bank as usual sits sideways always. We've got institutional support. So net sellers had worried 6,237 crores of selling last week, but domestic institution managed to do the buying of 8,700 and market went up. So it's who's calling the market? It's domestic institutions in the cash market. Right, something a little bit of worry is there since Fyers are not coming in. And that is following the hawkish outcome of the Fed meeting previously. That also derivatives are moved up from the FIDA last week, you see. But if you see, it's indecisive on the FIDA and the FP pro traders and all this. So they are indecisive, neither bullish nor bearish. You can't, as far as the F&O data is concerned. Right? Otherwise, institutional selling in the cash market is trouble. Hope they come back. Right? It may take some time, but I hope they come back. At least they don't sell big. Last week also two big sellers selling was that. It's only because domestic institution bought is why the market is. That's a concern. That's why it's at a crucial resistance. The market will already break out much more. Global markets is the next section where we understand the currencies, the commodities, and the global US markets basically. Right. If we begin with the currency, we can see that it has spiked up slightly, but it's flat since last couple of weeks. Since November, it has moved 3.6% from the swing low, and it's at sideways momentum and rising up. The dollar has been managed by the RBI and it's at the same zone of 83 level. It's a flattish close this week also. Remember, it's at the top of the ascending range, and breakout is managed and controlled by the Reserve Bank. But rupee remains to be weak. Right? Oil is 2% up this week, and it seems like it is heading towards the channel top. We may have trouble if it breaks out of the channel to stop. The moment it is sideways as of now, and it climbs back in the bull zones, we can keep calm, considering the fact that there was an oil importing economy. Look at gold. Gold has been consolidating at the top zone itself, not ready to break down from this neckline after it had made the all-time high a couple of months before. Right. So, but otherwise, gold is in sideways and falling. This is because of fall of 0.5%. Like it's consolidating at the top. Gold is rising up from the bottom towards the top. That's what it is. US markets are actually slightly red at the very top. You can see some small flattish doji indecisive candle, while Nasdaq also is at the very top, meaning a red candle is all-time high. The S&P 500 is also at the top after the breakout. So all of these indices, the US market itself has been rallying a lot, just like ours, and it's at the very top, and it's probably consolidating, showing some red. So I'm slightly cautious because it's a mono market. Our market also doing the same. It's a very top. Anything could happen from here. So there is a resemblance there. So public view is not that bad, except that it's at a crucial zone where anything could happen. Just like our markets, that's what we are getting. Right? No big worries on rupee and crude oil and gold and currencies as of now, and US market also seems to be just consolidating after a big rally. But what from here is the big question. Actionable for the next week. So here we have the stock picks actionables for the next week. One is Wipro. IT sector is breaking out and has been reversing. So is Wipro. Wipro had done a deep correction. It had been beaten down, unlike the other stocks, much more than the other stocks like Nifty and TCS, and it is now giving back. Right, it's breaking out of a rounding pattern or a cup pattern. There could be good moves much beyond the 600 that's marked here. You can trade from there, but there could be some consolidation that could come at 1613, then 613 or 600. That sounds. And have tight stop losses in case something goes wrong with the US market. So that's a breakout of the consolidation as well as a rounding pattern that's happening on the medium term charts. Momentum is bullish, volumes are big, and trend is also bullish. Right side you have Amateur that's also having it has a potential of having a breakout from that neckline. This trail is not straight away take. You take it only if there is a spike up above the 585 plus. Only then make the entry. Otherwise, don't enter. Have tight stop losses at 550. Reason for the trade is decent volumes and rising bullishness and rising trend. Ambuja cement sector is also doing good. Both the entire cement sector seems to be doing okay. So that's the two picks, Wipro and Ambuja Cements for the next week. This is a weekly option strategy on the Nifty. You can see there. It's like bear call spread. Last week also we got the same. So basically, if the market goes down, we don't lose much. But if it breaks out, as long as it doesn't break out more than 22,385, we should be okay. Otherwise, we can adjust, but it's not likely to move that much probably. Since it doesn't run up a lot and it's a very top, it may be going slow, is what I assume. So if it doesn't work, then cut short. You know what exactly you lose, but get out before the expiry day. Right. So it's a weekly option strategy. We are selling a call at the OTM, and then much higher OTM we are selling. We are buying another call. So it's we are call spread. So the weekly Nifty. Right. Yeah, the requirement for margin is very less, and put your capital size depending on if the mix is rising at the 20 or not. No. As per your risk appetite, you will increase the number of lots. Capital requirements are less because it's completely hedged. You know what you lose, right? That's a payoff of actionable for the weekly option strategy for the next week. Now, let's just wrap up. Market did bounce up, but it's come at a crucial resistance on both indices. But otherwise, it is a close green. It's a green close, and it's gained momentum in the trend both. And it did bounce up well. Even the Nifty had bounced up better, cleared the 20 exponential moving average as well. Well, it's slightly lagging behind Banknifty. Right? Remember the rally, the retracement has happened is 4.5% and 8.5%. But a rally of 26 to 30%. So that's after breaking out of a cup and handle and multiple flag breakouts. You've already seen some all things are in favor of the bulls. Bullish long build up on the futures line. Pull call ratio options bullishness. There's momentum in the trend on Nifty. Trend close over to the bull zones on the both indices on the ADX. Potential W pattern breakout from here on both indices. Across the sector index movement and sector leaders that is driving the market. That has momentum in the bull zones. Now 20 exponential moving average, both indices are above that. Even weekly exponential moving average was 20. Both indices are above that. Bollinger Band is expanding slightly, beginning of an expansion on the upside. It's all in favor of the bulls. What's in favor of the bears? Fyers in sell mode. This market is showing some red on the top of rally. It's not bearish, but yeah, there can be some retracement or some pullbacks, some consolidation could happen there. It is having a small body on the Friday. The spinning tops in sometimes can be dangerous. There's a double top M pattern that's there on the Nifty. That could be potential reverse from the Nifty that could come in. There is also a change in polarity on the downside on the Banknifty. So lower price section is still in the Banknifty, which is greater than 15 5 weeks. Banknifty 90C major indices weights are in the peer zones where the market is at the all-time high. Can you believe that? So that's the divergence. That's why you have to be careful. That's some of the factors in favor of the bears. The market did decent bounce up. It has come to a crucial resistance and it managed to gain short momentum in the trend last week. That's that. Banknifty also has climbed up, although it is still in sideways and rising momentum. It has crossed the trend, crossed to the bullish trend, and it has closed above the 20 exponential moving average. Itself is good. So all eyes would be on the Banknifty. What will happen? Would that be a big breakout that happens on both indices, or would it be another resistance? That's the crucial question. But overall, the market for me is similar to what the charts are saying. It's mild bullish, mild because of the fact that it's a crucial resistance. The global cues and Russian fears, inflation, interest rate, war, hike, COVID, and all these things can come in as big uncertainties and big, black swans can come in anytime. So you have to be cautious. All they can do is push in size, manage your risk. That's all you can do. The rest is all you already done that part, the technical analysis and the probabilities. But you bet based on the push in size that you bet has to be as per your risk appetite, as per the volatility, as per how you manage overall risk, how you come out, what stop loss you put, and all that is what matters eventually in case of such big black swans that could come in any time, any point in time. You never know that. That's outside of our hand, outside of technical analysis, outside of human hands to stop that. The only thing in our hand is to manage and reduce the loss. The next week, the levels 21,500 and 22,500 is what I'm looking forward for the Nifty, and 45,000 and 48,000 is the Bank Nifty. So as long as this 21,500 and 47,000 is maintained, then we can hope for another leg of the rally on the upside about 22,000 on the markets. So as I always say, I've hedged positions just like what we have weekly option strategy today. Always cover your risk when you're playing down direction, especially. Manage your position size. Right? Protect. Have hedge strategies only. Do not carry naked positions overnight. Right? And also every dip that comes in any of this volatility could be opportunity for you to invest also. You can use as a collateral for trading on options strategies. Right? So look at the playlist for additional explanations other than the weekly or daily analysis. There are option strategies explained neatly in playlist. Look at that and then watch out for that also. Also subscribe if you're not subscribed watching this, and share it to friends and colleagues who will reach out. Put in your feedbacks, comment, it helps us a lot. You can subscribe to the X or Twitter where we post regularly technical analysis during the market hours that may help you. That's all I have for you. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.